Ladies and gentlemen, we are back at it again, bringing you a brand new video. And in this video, we are going to talk about supply and demand price action part 2. And this is part 2 because we have done a part 1 maybe about 2 years ago. If we head over to my tips playlist on YouTube, where I have a full breakdown and basic knowledge of the whole supply and demand system on my YouTube. When was the last time we did it? We did how to read price action order flow, trading the supply and demand methodology, and then people were asking for a part 2. So I thought, hey, why not give a part 2 to price action order flow and just kind of understanding the flow of the market. I'm going to kind of wing it. I have about 5, 6, 7 charts that we can go through, understanding trend, counter trend, sideways markets, the news and fundamental. All right, so I'm just going to kind of wing it by ear. This will be about a 15-minute video because it is very important to understand which type of market you are trading in. Are you trading in a high volatility market? Are you trading in a sideways market? Is the trend just shooting to the upside? Should you really be calling the top in the market by starting to sell? We are going to talk about all that. Take profits maybe a little bit, just more so the broad scope of things. And now this is something that I recommend people in my private group is don't worry too much about what is the price action on the overall big picture to start with. It is very important, but really what I try to hound into people is focus on the methodology first, focus on learning the system, the rules to it, and then after 2 months you can start learning about reasons why you should avoid certain trades and certain pairs, about why you shouldn't be selling this, and we're going to talk about that today. Okay, so I've been talking too much. Let's get into it. Hey, if you guys really do enjoy this video, really appreciate if you guys hit that like button, subscribe, notifications on. If you want to reach out to me on social media at Moneyball Austin, where I do share all these pictures that I'm talking about. So first, let's just talk about the DAX, I guess. This is the German index. This has been basically overall been in a sideways market for the past year. Now, what I like to do is I like to scroll a little bit out, kind of get a broad scope of the market, understand where the buyers seem to be coming in and where the sellers seem to be coming in. If it's all over the place and it's chop city, well, then it's really hard to get a read on the market. And then personally, I advise people, well, if you don't know what the hell is going on, simply ignore it and move on to another chart that you know what is going on. So if we look here at the DAX, we can clearly see that buyers have generally stepped in kind of where this bottom oval is, right? So what I have done is I've drawn a bottom oval here and then kind of like a top up here. And this is letting me know that this is generally where the sellers are coming in, and this is letting me know where the general buyers are coming in. And clearly it's been working out 1, 2, 3, 4, 5, 6, like 6, 7 times. So it seems like a wise idea that any time that it's back down to this ideal place, bouncing off of support, bouncing off of demand, just a big picture scope of things, this is where buyers seem to be coming in. Well, then it makes sense. Hey, you're getting value in here, right? So maybe you want to start looking for buying opportunities on smaller time frames. It always doesn't have to be trading inside a demand zone. Clearly, if a zone has been holding for so long, why not just trade the damn area, right? So if we go into like US 2000, what we were doing last year in 2021 is, well, we were trading this whole sideways range, just selling high and then buying low anytime down in here, right? And then finally broke out, and it was kind of like a fake breakout, pull back, respected, back down here a little more, and then broke up a little bit and then continued back down. So this is completely off of the table as of now, right? But if we want to start considering, say, oil, for example, let's pop over to oil. We have to consider a little bit about what is going on around about the markets right now. Like inflation has been skyrocketing over the last 2 years, so probably long-term selling the commodities is probably not the smartest idea, right? Inflation is shooting up, so you're going to see commodities like wheat, sugar, corn, crude oil, gold, silver, palladium, aluminum, copper. You're going to see the commodity sector just overall have a very bullish market. So you trying to sit there and constantly try to sell these things doesn't make much sense, right? So right now what's going on in the world with crude oil, obviously inflation is still the main thing, but also right now it's Russia, Ukraine talking about war. Well, oil typically shoots up in a market like that, right? Do I think they're going to war? No, it's nothing but a bunch of BS, but we need to be aware of, like, hey, this is what's going on. It's the biggest performing asset class out there is crude oil right now. It's up like 25% for the year. So with something up 25% of the year and we're only about a month and a half in, it's probably not a wise idea. I mean, like, really, guys, it doesn't take too much effort to say it's probably not a wise idea at trying to sell this thing. I mean, seriously, if we look at, like, we go back to that DAX chart and you asked a 2 year old kid, where do you think price is going to bounce? I mean, it's very logical. It's very simple. People are overthinking it. Just ask yourself, where's the general scope of buyers seem to be coming in relative to the time frame? And if I sit here and I ask a 2 year old kid, he's probably going to be like, well, buyers seem to be coming here. It seems to bounce here and go up. And you're like, wow, okay, well, maybe I should be looking for buying opportunities down in that area because it's been working for the last 6, 7 times, right? So if we go back over to oil really quick, we got trade reviews, we got a bunch of stuff, but I don't want to make this a 30-minute video. So 12 to 15 probably. With this said, understanding the market, inflation, potential war, which probably is not going to happen. It's the best performing commodity out there. It's probably not a wise idea at selling this thing. Yes, it probably is overbought and is due for a correction. But what did I say here? Don't be the idiot trying to sell this thing with no confirmation. Yes, short term 1 minute scalps is fine, but I do not recommend trying to hold a short for over than 24 hours. Based off of the previous month, guys, we get non-stop price going up. Maybe we get a day or two of selling, right? Maybe you get a 1 minute scalp for an hour or two. That's perfect. That's what you want. But to sit here long term and think that you're going to go against inflation, go against the supposedly war, go against the biggest commodity that's been performing this entire year, it's a stupid idea. Okay? Yes, I think we could be looking for selling opportunities, but now is not the point, right? In order for me to start looking for selling opportunities, maybe multiple time frame analysis, but I need to see this thing starting to drop first. I need this thing to actually to start to fall to show me that sellers are taking control. Okay? And what do I mean by that? Well, we're going to see smaller time frames, momentum lines being broken, opposing zones being removed. Like if we go to the 4 hour, there's no evidence of this thing breaking yet. I mean, clearly higher highs, higher lows, higher highs, right? We're pulling back now. Is prices going to drop? Okay, then that's going to be the first evidence of buyers, or sorry, sellers starting to come into the market. Because now we finally broke this kind of upward general trend line here. But as of now, it's probably not a wise idea, right? I could actually understand if people are looking for buying opportunities. Okay, so let's go into another example because it's quite easy. You just got to take a big scope back. And what do I have here? DAX, oil, euro, pound. Euro, pound. What did I say here? So this was a trade review that I got into. What I was trying to do was I used multiple time frame analysis. I'm going to leave everything on the charts for you guys, but here on the weekly time frame, previously a lot of buyers stepped in back here in February 2020. Look at this big move to the upside. Okay, very strong move to the upside. So that is telling me that buyers took control down in here, trading the supply and demand system. So if prices do return back into that area, I understand that I am going to be trading in a counter trend move. Okay, so the odds, the trend is against me because I'm trading counter trend. So maybe I want to do smaller risk, but also I probably want to consider my take profit area as well. If I'm trading with the trend, okay, it makes more sense to go for more of a 5 to 1, 6 to 1, 4 to 1, right? Go for a bigger risk to reward versus if you're trading counter trend, you're asking a lot more from the market. Usually you think about it, impulse correction, impulse correction. The corrections are like half the size of the impulse moves, right? And we will talk about that on the daily time frame. So I understood, hey, big picture, I want to be looking for buying opportunities. Perfect, cool, that's awesome. I go down to a smaller time frame and I see this type of price action. What do I see? Well, I see lower lows, lower highs. Lower lows, lower highs. We got this big imbalance, correction, grinding down, correction, imbalance, correction, imbalance, correction, imbalance. I understand that prices just made a strong move down to the downside. We made a big imbalance here. I'm projecting a potential correction will come in here because based off of previous movements, it seems to be making like a 4% drop and then a 2% retracement, a 3 to 4% drop and then a 2 to 3% retracement. So we just made like a 4% imbalance to the downside, creating a new low. Now is the time where we might see a correction move come into the market, right? As well as, hey, I have higher time frame on my side. I have prices sitting inside my demand zone. So cool. I think this is an okay area to be buying, but I understand I am trading against the trend. I'm trading the corrective move. So maybe what I want to do is I want to take smaller risk and I want to go for a smaller risk to reward, but I need to see evidence of buyers coming into the market. Perfect. Do I see buyers coming into the market? Well, like I mentioned here, I start to see downward trend lines being broken, opposing zones being removed, very strong move to the upside right here with two very strong black candles being printed, and then simply I am buying the pullback. I have a story of why I am getting long. I'm trading inside a higher time frame. I understand the correction, imbalance correction phase. I understand I'm going to be managing risk. I'm not going to do a normal risk here like I'm trading with the trend, right? That'd be really stupid. I'm trading against the market. I mean, quick take profits. And that brings me to my take profits. Like clearly the sellers are taking control up here, right? So why don't I get out before that, right? It doesn't make much sense to get out right up here, right? Prices might not get up here. So get out at a nice 2.5 to 1, 2 to 1, because that's where potentially the buyers, or sorry, the sellers might come back into the market, right? This is not rocket scientist stuff, guys, but this does take a little bit of time to start getting a feel for the imbalance correction type of stuff. So let's talk about an example from a member in the trade group from like last year. He was posting this trade review, and let's see why it doesn't make much sense to be trading this. So he was looking at this New Zealand dollar trade. He was trading inside this area of demand. So when prices came back down here, he was looking for buying opportunities. Cool. I think that's totally fine. Okay, he's looking for buying opportunities. He sees his setup, which is over here on the 15-minute. He's waiting for this pullback, and then he'll get long. This is based off of how he's trading. Now, he never got the pullback. Instead, prices came into the zone and started taking off again. But where did it take off to? It took off to this previous area of an opposing higher time frame zone. So this opposing 4-hour supply now is in control, going back down into a tested area of 4-hour demand. So it probably does not make sense to buy something that was created over 24 hours ago on a 15-minute time frame when the higher time frame is in control, going back down into a tested market. So in this case, I would say, hey, you had a setup, but ideally you're not in the right market condition anymore. You know, supply is in control, you're buying in a tested zone, prices have gone too far, just wait for the next trade. Okay, so it just doesn't make too much sense about why he would be buying this pullback. Okay, so let's get into another one. Like there was a good one on soybeans a long time ago. Soybeans. No, we got to go to the futures. Soybeans. Soybean. So understanding just general market. I had this marked out from a long time ago. This will be hard to see, but on a 4-hour time frame, this is all relative to the different time frames, right? Same thing on a 15-minute, 4-hour, 1 hour, but it's important to pop over to a higher time frame and just understand the type of market that you are in, right? So previously we had a big move to the downside and we kind of get this downward channel, right? Lower lows, lower highs, lower lows, lower highs. The imbalances, the lower lows when prices make that big move to the downside are bigger than the correction moves, as they should be, right? So I can understand why somebody wants to potentially buy down in here at the bottom of the channel. It is risky. You are trading counter trend. And now personally for me, when I trade counter trend, there is a 20% difference in my win loss when I'm trading counter trend versus trending markets, right? So it makes more sense for me to be selling this thing. Now that doesn't mean I can't trade counter trend, but statistically, I shouldn't be managing the trade or risking the same amount on a trade like that if I'm trading trending market. Okay, it doesn't make too much sense if you guys agree with me, right? I think it's cool to be buying in here, sure, but understand the market condition that you are in. Okay, so let's go to an example of a stock example. Okay, let's go to higher time frame. This is the same thing on any time frame, guys. Just like scroll out, get a big picture for it. We got to go to stocks. is it Caterpillar I wanted to talk about? This is, a decent idea. It's not the most obvious. Let's go to this one. Boeing company, okay? So we seem to be in an overall downtrend. All right. Reason why I have this kind of oval drawn out is because this is kind of where the downward, how do I explain this? Like where sellers seem to be coming in after the corrective move. Sellers seem to be coming in, right? So if it continues to fall down and it pulls back up to this area, we might see sellers come back in. I said here, with price in an overall downtrend, reacting off of the pivot point area of supply plus the downward momentum. So I am looking for selling opportunities on the lower time frame. Cool. I am sitting inside an area of a supply zone, very, very strong moves to the downside that created a new low in the market. I am reacting off of this kind of downward slope. I am reacting off of this momentum line. So there's a story of why I am getting short here. There's reasons on the higher time frame. And that's what we're trying to do. If you guys imagine about why you're taking a trade, what's that old scale that you would see? You would see like this weight scale, right? One on this side and one on this side, and it would have a little plate here and a little plate here. You put too much weight on this side, then, well, the thing drops, right? You put too much weight on this side, the weight drops. And if it's equal weight, it stays the exact same. So what you're trying to do is say, build an analysis and a theory or evidence about why one thing is going to happen over another. So you're stacking up the favor. Hey, I am sitting inside higher time frame supply. It was a previous pivot point area of supply with lower lows, lower highs. I am bouncing off of the momentum line. I am selling one of the weakest stocks out there. You're trying to create evidence of why you're looking for selling opportunities, right? And the more, the better. Okay, you have a system, you stay with it. You're waiting for lower time frame confirmation. You want to see very strong moves to the downside. Cool. You have enough weight on one side. Theoretically, statistically, one thing should happen over another if you have this on your side. Okay, cool. Right? That's what we're trying to do. And that's what's really helpful in the higher time frame as well as multiple time frame analysis. Okay? So I get why somebody would be looking for selling opportunities here, just understanding lower lows, lower highs, lower lows, lower highs. Okay? Let's go into another example, Walmart. This is something I posted on my Trading View and my Twitter, and I think I made a video about this, but this is an obvious area of demand that should be on everyone's chart on Walmart, right? It's been holding once, twice, three times, four times, five times. So a lot of people will see this as a major support line that's holding or a major demand area that is holding. They are not wrong. I agree, it's clearly holding. But what you notice in price is ever since this touch over here, it rallied all the way up here, price, this is the biggest reaction from price hitting the area of supply. Prices pulled back again. It was never able actually to break that high. Price pulled back again. It made a lot smaller move. It only went up this high. And now it went back down into it again, and it only managed to make this high. So that's telling me that less and less and less buyers are coming into the market each time it's coming into that area of demand. So with that in my mind, is it really a good idea at buying this thing if prices come back into it again? This is when I was pointing to it over here, this arrow. A potential break is coming in the future. This is still valid for long opportunities on a smaller time frame, but to say that this is going to be the area that holds price and takes it all the way back up to like 150 territory, it's, to me, there's not enough evidence. Okay, now recently earnings came out on this, and this is another thing that you guys got to be aware of is, hey, like earnings is coming out in the stock. Do I really want to be trading this pair? Because some crazy violent moves can happen from these earnings reports. You could get stopped out, owe your broker a bunch of money. If you're risking, say, $100 a trade, price gaps, and then you end up losing $1,000, right? That's happened to me. I made a video on that actually about, just be aware of this stuff. Being aware if you're trading currencies of the Fed rates coming out or CPI numbers coming out of just the major news announcement. Do you really think it's a wise idea at trading a 5-minute zone or a 30-minute zone with a news event that comes out once every 2 months or once every month? It's probably not a wise idea, right? So understanding the market and just learning as much as you can and manage risk is extremely important. Okay, so let's go into another example. Uh, Walt Disney. Okay, this overall trend is down. We got imbalance, lower low, lower high, lower low, lower high. We have price sitting inside an area of supply right now, which previously pushed price all the way back down here. So it's a pivot point area. We're sitting in supply. I get to why somebody is selling on a smaller time frame. Now, sure, if you want to trade it straight up on a daily, go for it, right? I personally like multiple time frame analysis, so I like the idea of selling on 1 minute, 5 minute, 15 minutes while prices are sitting up in here. That's when I think you're getting some really good value, right? If you're in a sideways market going, let's imagine you're going in a sideways market like this, to me, buying down here makes sense, selling up here makes sense, but trading in here is a lot lower probability. I mean, I would rather be selling up here at the extreme and buying down here at the extreme, right? Makes kind of sense, don't you guys think? Right? So I get the theory of why somebody might be looking for selling opportunities. If we go to Delta Airlines, okay, here's another example. Price overall reacting off of weekly and daily supply. Overall trend is down slash sideways short term, right? Trend is in an uptrend short term relatively to like what's happening over the last 60 days. But we are reacting off an area where prices previously pushed this thing all the way down. It's reacting off of momentum. So this is another example of like, hey, looking for selling opportunities on like 1 minute, 5 minute makes sense to me instead of buying 1 minute zones. I think another one is like Alibaba, overall downtrend. So overall this trend has been going down. We got this major move, and this is kind of just the general area of where sellers are coming in and the general area of where buyers are coming in, right? So if prices are coming back up into this area soon, I get the reason why somebody might be coming out and selling this thing. Now, when I look at this, do I really think it's a good idea at trading something with earnings coming out tomorrow? Or this is Monday, the 25th, as of me recording this video? It's probably not the wisest idea. I don't care if this thing all of a sudden shoots down here. It could shoot all the way up and you lose a lot of money, right? If you want an example, you look at Snapchat. Facebook had horrible earnings. And then I believe Snapchat is it owned by Facebook? Yeah, I think they bought it for like $1 billion. So people were projecting that Snapchat were going to have absolutely abysmal earnings reports. So everybody started selling this thing down pre-market the day before the earnings came out. And in fact, it was actually really good earnings and it shot all the way up. So just be careful with these earnings, right? It's something I would advise people completely stay away from, because even back here, earnings, here's a big gap to the downside. I don't care. I ain't trading this thing before earnings, holding it before earnings, or trading it right after earnings. I want to be just like in and out of a trade on a smaller time frame. I don't want to be holding that thing going into earnings. Okay, guys. So that kind of wraps it up. But understand, it's something that everybody needs to consider. Is price action, order flow, what's the market doing, what's the news events, is it really outperforming, right? Like we talked about oil and commodities, is it inflation coming in, is there a potential war? Let's talk about, are they potentially hiking interest rates? There's things that you have to consider that's difficult for people to fully understand and embrace when they're first getting into trading. So this is what I recommend people when they come into my group. It's the 90-day program. I say focus on the whole methodology. Don't worry about anything else for the first 30 days. I want you to learn the system, learn the ins and outs of the rules. After 60 days, go back and actually watch these videos in the course that I have, like 2 hour long videos talking about general price action and things to be aware of, and about why at certain times, like, you want to avoid this thing, while certain times you actually want to trade it, right? Understanding the news might come out, understanding it's just a bad overall market to be trading. You're sitting in a higher time frame supply zone and you're thinking about buying. You're reacting off of an area where sellers seem to keep coming in every single time that you're looking for buying opportunities. Basically, what you're trying to do is you're trying to build enough evidence of why you are getting long or short, right? And just get the feel for it. And it does take time to gain that knowledge. It's not something that you just watch a video on or something like that. It takes time. You have to open up your mind to what other traders are considering. Uh, it's very important to actually open up your mind to see what other traders are actually looking at, not what you're looking at, but what other people are looking at. Okay, yeah, it might be reacting off of a pivot point area of supply where it created a new lower low. It's bouncing off of momentum. I want to be looking for selling opportunities, but maybe big picture, like you're like sitting inside like an opposing opposite reversal head and shoulders pattern that's extremely bullish, or maybe a candlestick got printed on that time frame that's screaming this thing is bullish, right? So when you get things like that, really contemplating your analysis, you got to kind of decide what are you going to do. Are you going to stay away, or are you going to pull the trigger, right? So, hey, if you guys want more on this, like check out moneyballtrading.com. It's right here. You get that free training, you get access to a lot more videos. You'll learn why 90% of the traders are losing money, what my top 3 tips are, a separate video talking about the whole supply and demand that I don't have on YouTube, as well as check out my supply and demand tips playlist, part 1, part 2, part 3. Talks about everything. And I would love to have you guys part of the group where the whole goal is to bring traders to consistently profitable in 90 days. And I made a video on that actually. How to become a profitable trader in 90 days. And I talk about it in that video. What's stage 1, stage 2, stage 3 that I recommend everybody checking out. It's a really good video. Um, what you should be focused on for the first 30 days, the 60-day mark, and the 90-day mark. But hey, I would love to have you guys part of the team, moneyballtrading.com. If you guys have any questions, let me know. Let me know what you think of this video in the comments below. If you guys want to reach out to me on social media, at MoneyballAustin. At MoneyballAustin, Twitter, Instagram, Facebook. I love these videos, guys. Whew, that was a big one. Thank you guys so much. Appreciate it. Share it with other friends and family. Catch you soon. Bye-bye.